I want to talk about these Oracle numbers, and it's up 40% right now. When you look at these numbers that came out, they were not good when they crossed the wire. I'll cover that in a second. But when you looked at the guidance, it caught the whole world off guard. To the point, I don't think I have personally ever seen anything like this other than comparable. I think, Daniel, you and I talked about this before we came on, is when Nvidia blew out those numbers. And I said, there's no way Nvidia is going to make those numbers. Expectations are too freaking high. No way. As soon as they report those numbers, 180. I did a 180. I was like, I've never seen anything.
Quarter.
Yeah. I was like, I've never seen that. And the demand for AI, really, and that's what really sparked everything. This is another spark. This is another spark where AI is not even close to being done. But when you look at the RPO's remaining performance obligations, and again, there's like a black backlog, it surged from 360%, which, putting numbers on it, it's 150 billion. We're not talking about surge 360% from like 10 million to like whatever, 40 million. It's 150 billion to 450 plus billion of booked business. And Oracle now sees 144 billion in cloud infrastructure revenue in 2030 fiscal year. That is up from just 10 billion in 2025. It's insane when you look at these numbers. It's led by 4 multi-billion-dollar contracts. It was signed by 3 customers. 2 of those, I believe, from what I hear, are Starlink and OpenAI, and the other is either Meta, XAI, could be Nvidia, AMD. I mean, they have everyone on lockdown right now. It's just increasing their spending. I'm not sure if people understand how much 450 billion in revenue is to Oracle, but this quarter that just passed, they reported 15 billion in revenue. So if you have a run rate for a year, 60 billion in revenue, they're talking about generating 450 billion in contracts that are already booked. This is future business. A lot of takeaways. I want to get your takeaway from it first, but there's a lot of takeaways here we're going to go over because this was a fascinating quarter. And I've been saying this since I've been doing this podcast for over 15 years, 16 years now, that you never really want to only look at the actual results for one company. Like if Boeing's reporting amazing numbers and they're seeing their backlog increase dramatically, there's literally 100 plus publicly traded companies that are going to benefit. The same with Oracle. When you see this amount of spending going into AI and it's accelerating, guys. Remember everyone said it was going to slow down. It's accelerating. There's going to be so many winners from this trend that are still under the radar. And we've been doing very well in our AI newsletter as well. It's just this trend is 100% intact. It's unbelievable. Dan, I want to get your thoughts on it.
It is crazy on the, is this an Nvidia moment? Because that's exactly what we were talking about earlier this morning. And to your point with Nvidia, and again, I don't want to be disagreeable for the sake of it being disagreeable, but this is crazy. And a little bit of emotion, it just shows you the reality of investing. We're up big on this to see it do this. It's almost like, oh my gosh, this has to be the end. When in fact, it could be just another leg higher. Frank, the real quote that is being all over social media is, quote, "We signed 4 multi-billion-dollar contracts with 3 different customers in Q1. That's according to the CEO. That jumped RPO, think backlog, 359%. In the next few months, we expect to sign several additional multi-billion-dollar customers, obviously. Frank, their projections on what they're going to grow at are crazy, basically doubling every 2 years. Now, there's a lot of time between now and 4 years ago. We talk about presidential cycles and all that kind of stuff. However, really, I think this boils down to the next quarter, just like Nvidia. I'm not calling these guys liars. I'm very happy for ZRA members. This is amazing. Just like Nvidia, when they came out with those projections a few years ago, Frank, the next quarter, they continue to blow it out of the water. And really, the hard part, in my opinion, to believe in this is that you could buy, I mean, I don't know about buying it right now today, but how does Oracle not come out with amazing earnings for the next several quarters? I mean, you can't lay an egg after this statement from your CEO.
Well, they are. That's why it's up 42%.
Yeah. But my point is that we'll see what the stock does, because obviously we're pricing in, you know, the market is forward looking. So you take these quotes and these projections and you add 40% of the market cap. I think, I heard on CNBC, Frank, before we started this, Iron Man himself, Ellison, I think is now the world's richest man, passing Musk on this move.
Yeah, and you want to know how rich he is? You know how many shares he owns? 1.1 billion shares of his company, over 40% of the company. It's very rare to see an owner own that much of the company in such a big company. Because it's usually you're selling here and there. I mean, this guy's owned 40% of the company. So he was worth a cool.
So he went up 150 billion a day, basically.
120.
Or no, I guess it'd be less than that.
So he was worth only 280 billion yesterday. Yesterday, that's what he's only. Today he's worth close to $400 billion. And so imagine making $120 billion in a day. This isn't a company. This isn't an IPO that came out. This isn't OpenAI. This isn't Anthropic at the valuation. This is a person.
I'd tip it.
That's a pretty,
Ellison.
you know what? You should take yourself out a little bit. I think he's going to buy probably 5 or 6 more islands, maybe buy Hawaii itself. You know, you're looking at a company whose market cap was $670 billion yesterday. Today it's closing in to be another $1 trillion company, whatever that is, maybe the 5th, 6th, or whatever it is. Yeah. So when I look at these numbers, I want to try to tear them apart. I want to say, okay, what are we missing here? And I didn't see anything that we're missing that doesn't justify a 40% move in the stock based on this business. Some are worried about margins for Oracle, and we know some of these, we saw Smith Micro, we saw Dell, you know, margins very thin because, you know, to get Meta's, Amazon, Microsoft, Google's multi-billion dollars, CapEx and spending, it's extremely competitive, and a lot of it's going to be based on pricing. But Oracle said earnings before interest and taxes, that's called EBIT, will be in the mid-teens, and they're expecting 6 to 7% growth. So there's a lot of analysts, a lot of people saying, well, what are the margins on it? Even Kramer said that, I think, to David Faber today on CNBC when I watch it, and they were like, I don't know what the margins are. I think, you know, they're pretty thin. Well, they're not thin. They're making a lot of money off of this. So that's a big deal. When you're booking revenue, you could book that. If you book, you know, $400 billion in revenue, but you're going to lose $600 billion, it's not a good thing, right? You could say, okay, now we could take out more loans, our stock is up more, we could, you know, leverage shit out of it, whatever. I get it. There's a million things you could do with that, but it doesn't seem like they won this business based on pricing. It seems like Dell wins on pricing, Smith Micro wins on pricing. It doesn't seem that Oracle does, because they're actually seeing an increase in their pricing, right? Because their earnings are going up. And that means, what does that mean? It means they have the best freaking services. It means they have the best technology within AI that the biggest companies in the world need to use. That's why they're booking them. And it's incredible, you know, when I look at the margins, because they look great to me. Right, again, looking at the numbers. 20 years covering this. I don't think anyone has seen this before. We mentioned that with Nvidia. Even the tech analysts covering Oracle, they were just like, we've been doing this for 20 years covering technology in this stock. And they were flabbergasted. They had no idea. You had some of these reports saying that we couldn't really believe it. And Morgan Stanley, I thought, had the funniest take, because Morgan Stanley thought they were smart. And I'm pretty sure they have a neutral rating on this stock. They might have upgraded today. I don't know. But on Monday, they probably got word that the quarter was going to be strong. So they raised the target from 175 to 246. Remember, it's trading like 350 right now, whatever it is, 340. So this was yesterday, right? They did this. So, you know, on Monday, Monday did before the quarter, right? So, yeah, so they increased it to 246. Again, that's where the stock was trading, I think, yesterday. And so it had to be a neutral, right? It's on a buy rating. And again, it's like 320, whatever it is, 330 now. And by the way, when you see one of the largest investment firms raise their target by that much, 175 to 246 is massive. I mean, we can talk about market cap too. It's just massive.
Either the week or day before.
Yeah, a day before. You can guarantee. You're never supposed to say guarantee this. You can guarantee absolutely 100% fact. They knew these numbers would be strong. They clearly didn't know how strong. They would have upgraded to a buy and increased their target price to 300. They're probably going to increase it right now since it's 246 and they look like. So now thinking like, hey, we got the word and we're raising our target. You look like an idiot right now, because now you just raised it to 246 2 days ago. What are you going to do? Say, oh my goodness, these results are great. We got to raise it again. Are you going to continue to have a neutral rating on this? So when I look at Morgan Stanley, I feel like, you know, they lose credibility here. The fact that they knew this quarter was going to be good, but they didn't know how good, and they didn't raise it from 175 to 246 a couple days before. You never see that unless you know something. The analyst risks his job by doing that. He's not going to do that. Okay, he could just say, hey, we're expecting positive results. We'll see if you don't raise it a day before unless you know those numbers. It doesn't happen, right? Because you're risking your job. Because if Oracle comes out and that stock would have fell by 30% today, this guy's on the street tomorrow. That Morgan Stanley analyst. They don't do that. Trust me, I know that world very well. They wouldn't do that. But my biggest takes here is this. AI is still very early innings. Spending nowhere close to slowing. We said this over and over again, right, Daniel? So many analysts were worried of a slowdown, AI, CapEx, all this scary shit. You're not going to have your ROI. It's going to slow down.
And they're still out there.
They're still, well, I don't know if they're going to be out there after this. I know, because it's more, it's not just one quarter that we're seeing, right? We saw all of the hyperscalers report, raise their numbers, raise their CapEx, right? We saw confirmation of that. And we didn't guess on this. We just have great contacts in this industry. None of them that I talked to could confirm a slowdown.